Stop meddling with your trading strategy. Here's why. Hey traders, warm welcome to you. So, you've got a trading strategy, you've got a trading system. And listen, we've all been there, I've been there, maybe you haven't been there, but possibly if you've clicked on this video, the title's caught your eye, you've thought, yeah, maybe it's me, but I'm interested anyway. So while you're here, let's talk about this. Meddling with your trading strategy is not a good thing. Let's consider why. And I'm going to use an example from just my own experience. So you've got a nice little strategy out there. You've got maybe your filters set up. We know we talk about having a strategy set up into filters and then a trigger. Okay, let's say you've got 1, 2, 3 filters. And if you're subscribed to the channel, you've probably seen a couple of videos we talk about ideas for filters and settlement strategy. If you're not, maybe consider doing so. But for you, a filter might be oversold stochastic. It might be price above yesterday's high. It might be price above today's open, something like that, right? Okay, just an example, could be anything. So some sort of filter that says, yes, I'm prepared to take a trade. Okay, what actually would that do? Oversold stochastic price. Okay, that would be quite interesting. That would be a reasonably bullish overall environment, but now oversold. Perhaps we'd say that was on a 15-minute. That would be quite interesting for a trend trade. So anyway, regardless of that, so the trigger then would be maybe taking out, price is greater than a 4-bar high. Okay, forget about what it actually is, but you've got a trading strategy there. Now, what happens when you're trading is this. You go in and you start the trade out and it's running nicely and you pull the trigger on it and you have some exit rules. And this could apply to entry or exit. But what happens is when the price is coming towards your exit, you overrule it. You say, hey, my limit was 50 pips, 60 pips, whatever it may be. It's coming towards it, and I just think I'm gonna take the money out because you don't want to lose all the money. Another thing might be before you even pull the trigger, all your filters are in place. The price is about to break that high. Let's just put this into kind of visual mode here. You want to see that price break through this high, for example. That will be a trigger there, for example. You may well see the price going to here before it even gets there and pull the trigger long early. You think, well, that's close enough. It's like 15 pips away. It's definitely going to do it. The trouble, and then that may work for you. That may work. You might get an extra 15 pips on the trade, make 65 instead of 50, and you think you're a genius. The problem with that, guys, is that two things. Number one is you are cementing the worst behavior ever because you're not trusting yourself and your analysis and your strategy and your trading plan. If you're overruling your strategy, you are basically saying, hey, I don't think my strategy is the best thing for this trade. I'm going to do what the heck I want. And not only does it damage your ability to trust yourself, but from a kind of psychological perspective, but it also damages it from the results you get from the system. One of the biggest advantages of trading with a system or strategy and sticking to the system or strategy is that you've got a great data set. You can go back and look at it. I'm not talking about back test. I'm saying, hey, I've traded this thing for 3 weeks now. What are my results? And you can look at it and say, it's worked, it hasn't, it needs some small tweaks. Example, which I've given you before, you guys are subscribers, by the way, welcome and do appreciate your subscription, is that the example I gave before, trading the Dow 10 years ago, probably maybe even more, I would have a 10 pip stop. That was just my style. I was scalping away and I was losing money. Quite frankly, I was just losing money. I wasn't doing very well with that specific strategy. When I analyzed it, I basically, to cut a long story short, I basically realized if I just went 15 pips on the stop ticks as it was trading the Dow, I would be profitable. And those trades would all be over those sequence of trades would be profitable. So did that, just changed the whole thing from being an awful system to being a great system. Now, that's a real world example and that happened, and I've simplified the story a bit for the video, but the point is, without having that data of always taking that 10 tick stop, 10 tick stop, 10 tick stop, I wouldn't have looked at it and gone, you know what, look at that. All I need to do is either stretch my stop 15 ticks or adjust my entry. Let's just go to 15 tick stop and see how we get on. wow, changes the dynamic completely. I was just a little bit too early with my entries in that specific strategy. So fixed, job done, now we can make improvements. So the point is, if I was taking maybe a 5 tick stop, then maybe a 15, then an 8, then a 20, then a 2, and I'm all over the shop, I've got useless data. There's nothing I can do with that apart from I've maybe lost money, I've maybe made some money. It's complete useless information, useless to trade from. Whereas having that solid data that I've stuck to rules and recognized that it was a weak system, how can it become a profitable system? No, it's a bag of what's it, get rid of it, or actually look, all I've got to do is tweak a few things and we're good to go. So meddling with your strategy, stop doing it because number one, the trust issue. There's a psychological thing. If you don't trust yourself and you're constantly overruling what you say, then you can never really believe in what you've done. And at the end of the day, if you think about this, just stop and think about this for a second. When the markets were closed and you were at your full focus capacity, you were at your best, so to speak, you've come up with this system. You are basically saying to yourself, when you overrule it, that when you're under cognitive load, when you're under a little bit of stress, when you're under pressure, the markets are open, P&L's moving around, that you can think better and more clearer and make a better assessment, then you're really kind of, you know what I mean? You can get what I'm saying here. You're really overruling things. It's like a pilot who would be up in the sky and, you know, he has an engine failure and he gets his book out, looks through the procedures and he says, you know what, I'm not going to bother with the procedures. I'm just going to do my own thing. It doesn't make any sense, right? Now, I want to add this final thing before we end the video. If you want to add an element of discretion into it, and I am a big fan of discretionary trading and having that element of discretion, you have to still have rules and then have a patch that's discretion and then have still rules within that discretion that says, okay, well, I'm going to go, you know, long, let's say 10 to 15 pips away from whatever level it is. That's my level to go long. At least write down what made you make that decision. So, but honestly, I would say get rid of that until you fix this. But once you perhaps go down and start doing some discretionary type stuff, some price action stuff, you've still got some variables that you're looking at. And so even then write them down and say, well, actually, you know, we had a long candle, we had this, we had that, so that you have got some data to work on. And if you find that your gut is proving good for you, then by all means keep it. If you find that it isn't, you go back and say, well, if I hadn't used discretion and I'd just gone long when it was 10 pips away from my filter price, whatever it was, then I'd be okay. You get to know and learn more. So anyway, guys, stop meddling with your strategy. Keep it, even if it's a losing strategy, because this losing strategy can be the seed of a very powerful winning one. See you next one. Take care. Bye-bye.